Welcome to My Generation, brought to you by the South Shore Senior News. I'm your host, Steve Dubin. South Shore Senior News is a monthly newspaper that connects seniors and the sandwich generation on a monthly basis. This segment is being recorded and can be found along with other podcast segments on southshoreseniornews.com. This particular segment is about alternative ways to stay in your home and age in place, and in particular, using a HECM mortgage. Some people refer to it as a reverse mortgage. Today, our guest is the dean of reverse mortgage, the godfather of reverse mortgage, my friend and long-term colleague, George Downey. George is a director on the board of the National Reverse Mortgage Lenders Association, previously served 13 years on the board of the Mass Mortgage Association, an education member of the Mass chapter of the National Academy of Elder Law Attorneys, and continues to actively promote legislation to help Massachusetts senior homeowners. Additionally, he's written numerous articles on the subject and is a frequent speaker on radio shows and other podcasts. George is an articulate resource for the industry. He is currently the regional senior vice president of Federal Savings Bank, the Braintree branch, formerly Harbor Mortgage Solutions. And with that lengthy intro, George, let me bring you on. Welcome.
Well, thank you very much. And not sure I deserved everything you just said. One correction I would make, Steve, is that you're right. I've been on the board of the National Reverse Mortgage Lenders Association for a number of years, but they finally had the good sense to kick me off. And in my place, my son, Chris, has taken that board seat. So he's on the board of directors now.
Okay.
So, Chris, as you know, is the partner in our business here at Harbor Mortgage Solutions, which is now become the branch of the Federal Savings Bank.
Okay, and so let's talk about first that transition from Harbor Mortgage Solutions to Federal Savings Bank. Why the change?
Yeah, well, as our history goes back to Harbor Mortgage, created this in 1991, and then in the year about 2000, we became involved in reverse mortgage, and that turned out to be kind of a pivotal event in our development. Reverse mortgages have become really a specialty of ours, and really it enables us working with senior homeowners to be able to utilize home equity to increase and extend financial security. Unfortunately, reverse mortgages are more misunderstood than valued, which is unfortunate because they do provide a vital resource for many people. But in any event, that's been our passion, and we have developed that and been involved in changing the laws here in Massachusetts and elsewhere. But the link to the Federal Savings Bank really started about over a year ago. They are a national institution that is very much like-minded to us, but they have significant resources that enable us in partnership with them to be able to do more and serve more, and to be able to extend our service across all 50 states versus being restricted to just here in Massachusetts. So that's the genesis, Steve, of why we partnered with them. And we're working with their management now and really developing and enhancing marketing activities for senior homeowners, and also in recruiting again, like-minded people, to our cause.
Okay, and when I mentioned that you're the dean of reverse mortgage, you are one of the early movers in the industry. How far back do you go in helping people with that particular instrument?
Well, the term dean, I'm not so sure about that. If by dean you mean older, I guess we qualify there. we've got the birthdays behind us. But yeah, we were one of the early adapters in Massachusetts, really, to recognize and to promote the virtues and the interest of reverse mortgages and their ability to increase and extend retirement security. So in that regard, we were early to the game and have been passionate supporters and promoters of education and understanding as to what it's all about.
And just to clarify, we are talking several decades of experience.
Yes, we are.
Yeah. Okay. So let me go right into. I think that unfortunately, reverse mortgage as a term, as a phrase, is taboo to many people and very misunderstood. Maybe you could set the record straight of really where reverse mortgage, what reverse mortgage really is about.
Yeah, the reverse mortgage actually originated in 1989 under the Reagan administration. And it was created at that time to enable senior or older homeowners who want to remain in their homes to give them the ability to remain or age in place, but be able to tap into utilize some of the equity that they have built up over the years to provide more financial security. And the terms of the mortgage were created literally unique and have a number of features and benefits to them tailored to the needs of seniors. For example, one of them is going into retired years, from your earning years to your retired years, income levels drop to pensions and Social Security and so on. The reverse mortgage was designed to enable borrowers not to be obligated to make any mortgage payments. So facilitating their cash flow. Also to create access to some of the home equity that they have been built up so that they have access to funds in addition to whatever their savings are. Most notably in that is the ability to have a line of credit. But the line of credit here is unique. This line of credit actually is designed to grow and increase over time, compensating for cost of living increases that people would have. So the terms of the reverse mortgage are very, very different. And they are, again, designed to accommodate the needs of retirees. Some of the confusions about reverse mortgage, well, number one, has to do with especially in the early years, like there is in any place with money, there were some bad guys that took advantage of people. And unfortunately, there's been many, many adjustments to the program that mitigate and to manage and eliminate the risk associated with that. But the most popular program is the federal program, the Home Equity Conversion Mortgage, which is insured by the federal government, thereby guaranteeing the terms to the homeowners, so that these terms are guaranteed and will never change. Even though the economy may change, interest rates may change, financial markets, real estate markets can alter, they can be assured that what they bargained for will always be there for life. So,
okay. Go ahead. I'm sorry.
No, I was just going to say one of the disadvantages is that the insurance that provides that guarantee adds an expense to the reverse mortgage that you don't see in other types of mortgage. So the added costs of the reverse mortgage have confused people to think that lenders are overcharging consumers, but they should be. Unfortunately, it's not true, but it's a misconception that needs to be addressed.
Okay, and then who is not eligible for a reverse mortgage? So we can take that off the table.
Well, the eligibility begins with age. The minimum age for the reverse mortgage in Massachusetts is 62. So anybody 62 or older potentially could be eligible for that. But in addition to that, this has to be their primary residence, and they have to have enough equity in the property to be able to make sense. The benefits that are available are determined by a formula that includes the age of the youngest owner. Number two, the current market value of the property, which is determined by appraisal. And number three is the level of current interest rates. From that, a number, and generally that number today is roughly about 40% of the home equity. So if the home is worth $800,000 today, which is not uncommon in Massachusetts, 40% of that would be about $320,000. And then for that, the reverse mortgage must be a first lien in the property, so any existing mortgages they have would be paid off. The good news there is that the payments associated with those mortgages go away. And then whatever surplus is available after that is money that's available to them to withdraw or to use in a line of credit in the future. And that line of credit actually grows too, and it grows at the same rate as what's charged them if they borrow, as I mentioned.
Okay.
So it helps them in two ways. Number one, it eliminates mortgage payments or the obligation to make mortgage payments. And number two, it can provide access to additional funds that can supplement their needs for funds in the future.
And what can the funds be used for? Is it limited?
There's good news and bad news. The good news is that it can be used for any purpose. The bad news is it can be used for any purpose. So people can have the choice of being prudent or being foolish. And obviously, prudence is recommended. And in fact, that is the case in most cases. But it doesn't protect the spendthrift from himself or herself. So people can use the money inappropriately, but hopefully not.
Okay. And can you give me a real life story about a customer you helped and sort of how it worked and how it changed their life?
Oh gosh, Steve, we've got so many of them. Yeah, I can give you stories where it was a good idea, and also stories where it's not a good idea, because this program really and very candidly should not be sold to people. It is something almost like prescription medication. It should be used if the condition is right and the solution will benefit what the circumstances are. So this is all about education and so on. But situation that changed lives. For example, we had a client that had whose wife had a stroke and was totally disabled, and they all of a sudden had the need to fund in-home care services. They wanted to, like everybody, avoid going to a nursing home, but they had in-home care services that amounted to a little over $10,000 a month. And that put a huge dent in their financial resources. What we were able to do was to do the reverse mortgage, pay off the mortgage that they had, therefore eliminating the payment that they had, but also providing them with access to additional funds that, in addition to their savings, gave them liquid resources that enabled them to continue paying the in-home care services, as well as paying the cost of the lifestyle that they have.
Okay. And I know that you talk about your role as being a fiduciary, but rule number one is always doing what's right for the client or the customer. Rule number two is the same.
That's right.
And that being said, can you talk a little bit about how there was a problem in Massachusetts that you worked on legislation regarding the fact that there's a requirement for a counselor to talk to every applicant to make sure they understand what they are entering into and they can best use it. Can you talk a little bit about that legislation that really meant a lot?
Yeah, in counseling, reverse mortgage counseling is mandatory for every applicant for a reverse mortgage, and it's a good thing. It's a good thing because it provides a check and balance to make sure that the prospective borrowers understand all of the issues related to the reverse mortgages, what the costs are, what the benefits are, how it works, what it does, what it doesn't do, all of that type of thing. So the counseling is a mandatory requirement. And so each individual has to be counseled by a HUD-approved counselor. Now, that counselor has no voice in the approval process, but they issue a certificate. And we cannot proceed with the reverse mortgage application until we have that counseling certificate. So that's a national requirement. Here in Massachusetts, the state has taken it a step further, and that they have, back in 2010, the legislators mandated in-person counseling, meaning that the seniors had to go to the office of the counselor to receive face-to-face counseling. And if they did do that, and they were required to do that, then the loan would deem to be unenforceable. So that mandated in-person counseling. Now, that's the only state in the country that requires that. Now, the challenges to that are, number one, is that we only have a handful of offices where owners can receive counseling, and they are located predominantly near Greater Boston. So west of Boston is, with the exception of one office, there's no service out there. There's no service on Nantucket or Martha's Vineyard, and the numbers of counselors have declined. For today, I think we have we have about 10 individual counselors are available to serve the entire state of Massachusetts. So the physical limitation of a lack of numbers in distance. Seniors that are the candidates here, as you can imagine, have to travel, can be required to travel great distances. We've seen examples where they've had to travel over 100 miles just to get counseling, which in every other state can be done by telephone or video counseling. Well, we've been able to work with the legislators, and now we have an exemption to that regulation in Massachusetts, where now counseling can be done by telephone or video counseling, in addition to in-person counseling, if people wish to be counseled that way. So we have that. There's still work to be done because this exemption that we've obtained will expire in March of next year, 2024. So we have work to do, but a lot of progress has been made. And of course, advances in technology with video, Zoom counseling, and all the rest of it, have become more the norm now than what it used to be back in 2010.
Okay. And obviously the real estate market has had a great impact on the reverse mortgage industry and the need for that tool. Can you talk a little bit about that?
You bet. That's an important point, especially today. And just looking back and just going back to the Case-Shiller indexes, and just in the Massachusetts area, in the past 3 years, the average home has increased in price by about 46%. That is unheard of. I mean, we're looking at record prices today. Now, that's an advantage for the reverse mortgage because the amount of benefits is determined by the current market value. And the appraised value is determined by current prices. So while prices are at these lofty levels, this is the ideal time for people to be, number one, to be exploring this to see if it makes sense for them or not. Now, what goes up comes down. the law of gravity apply here. So we've seen these increases in real estate values that have been unheard of before. We're also facing economic uncertainty. We are in the last few years since the pandemic, we're in financial turmoil. Inflation has been in a runaway category. Interest rates are up, prices are up. The threats of recession are looming. We don't know what's going to happen. So real estate values that have achieved these lofty levels, will they continue to increase? Don't know. Will they stay the same? Don't know. Could they decrease? Yeah, they could. We just don't know. The only thing we know is what we have today. Now, that's why the recommendation is to hit the pause button. If this is something that you think might be a resource for you, check it out now and to find out what the facts are and whether it's a suitable solution for you.
Okay. And then, some people refer to reverse mortgage and HECM as the mortgage of last resort. But,
Yeah.
but obviously that's not true. In some cases, and you could give me a quick scenario of how wealthy people are also leveraging the tool.
That is a common misunderstanding, and it's really born out of misinformation, lack of understanding as to what it's all about. In the old days and prior generations, the house is for the kids. And well, that's not true anymore. But the house is also the largest asset that most people have. So they have this enormous amount of equity. I liken it to a big block of ice that's sitting out in the backyard. It's there, but it's not liquid. On the other hand, they're challenged with cash flow problems, liquidity problems. And what we're doing with the reverse mortgage is we're enabling them to convert some of that frozen equity they have into cash or credit to help them with their financial needs now and later. I'm sorry, you had a question, Steve?
Yeah, no, I was just saying, in particular, there are oftentimes wealthy people leverage reverse mortgage as well. And tell us quickly why that would make sense as well.
Again, it's we have this. If for most people, the home is their largest single asset, but it has not become a part of the financial planning process because it's an illiquid asset. It's not a manageable asset per se. But with affluent people, the reverse mortgage can, and in my opinion, should be a consideration in the financial planning process because it can enable them to create, for example, a line of credit. Take an individual who has no mortgage on his house right now. They could put a reverse mortgage in the line, say in their early 60s, while they're still working. They just said, remember that credit line grows. So the credit line grows and it compounds monthly, guaranteed by the federal government. That sum can balloon to be a significant amount of money later on where they have access to. That is in addition to any other savings or investments that they have. So again, the purpose of this is to be able to monetize home equity, to increase and extend resources for people in retirement. We just don't know what our needs or wants, for that matter, are going to be in the future. So maximizing liquidity and cash flow, that's the ultimate purpose of financial planning, is to marshal one's resources to enable them to have adequate cash flow and maximum liquidity at times when they need it.
Okay. Well, thank you, George. I think you've provided a pretty good background on what your industry is about and how people can take advantage of that. What is the best way to reach you to have further conversation?
Say two ways, Steve. Certainly, people are welcome to call me. My direct line is area code 617-594-3666, or my email is G Downey, so that's GDOWNEY at thefederalsavingsbank.com.
Okay. Well, George, thank you very much for being our guest. It's been illuminating for me to hear more and learn more. And I look forward to talking to you down the road. And anybody who's watching, if you have a topic or a guest that you think would be of value to our audience, please go to South Shore Senior News and let us know so that we can potentially add them to our roster of upcoming podcasts. Thank you, everyone, for joining us today. Thank you, George.
Thank you, Steve, for having me.